Hi, everybody. Thank you for being here. My name's Nicole Flora. I'm the Executive Director for the Lake County Economic Development Corporation. We are a nonprofit, and our goal is to grow the economy in Lake County. We do that through a few different programs, and tonight we're going to be focusing mostly on accessing capital and our partnership with the NorCal S.B.D.C and the Financing Center, and all of our relationships within our local business banking community. So, couple of housekeeping things. You're welcome to get up at any point. There's restrooms down the hallway. We are recording tonight's event, and we'll be replaying it on our website. So, Ross, don't say anything you don't want published.
That's good to know.
Yeah, it is good to know. Yes, it's not live, but it will be recorded and shared. We're planning first to have a presentation by Scott Rogowski. He is the vice president.
No, that's okay.
You're just the deputy director, also known as the vice president of NorCal S.B.D.C. Don't tell Kristen I said that. And then after that, we're going to have a panel of local lenders, and we're going to have a conversation about what it's like to borrow money for small businesses in rural California and what we can do to help our clients and the clients that are in the room access funding more easily. So with that, I'm going to introduce Scott. Oh my gosh. Can we just start over? Scott Rogowski is a seasoned business finance professional with nearly 20 years of experience helping businesses start, fundraise, grow, and secure essential capital. In 2012, he founded a nonprofit to connect small businesses with educational and financial resources, and in 2015, he launched a consulting business to advance strategic funding projects with the state of California, SBA, SBDCs, and chambers. The last 5 years, as the deputy director for NorCal SBDC, Scott has been setting a new standard for how to develop strategic partnerships, business economic development, and forward-thinking programs for entrepreneurs and expanding businesses. So I'm going to go ahead and give the microphone to Scott and stop talking. This will advance your slides.
All right, cool. Awesome. Good stuff. Cool. Well, thank you very much, Nicole. All right, awesome. Good evening, everybody. My name is Scott Rogowski. Do you want me to use the mic, or is this cool?
The mic is basically for recording. The room can hear you. So.
Oh, perfect. That's so nice. Thank you. You guys are doing a great job back there.
Thanks.
Yeah. I'm from Northern California S.B.D.C, Small Business Development Centers. How many business owners do we have in the room? How many of you are starting a business? All right, cool. Brave. How many of you are growing a business? All right, cool. Good stuff. So we got a little bit of mix, and then everybody else in the room is here to learn as well. All right, cool. All right, so this is the agenda. We're just going to talk a little bit about the SBDC, who we are, who we partner with. We're going to talk about business lending, loan options, and then how to qualify for a business loan. But you guys have a lot of other resources here that's going to talk about that as well, and then a couple case studies if you have time to get to them, as to like what's going on in your business and how they get there and different scenarios.
Just tell me if it's not working, just let me know.
All right, I just didn't know which button it was. Front, forward, or backward. Okay, so what do we do? So SBDCs, we're funded by SBA, Small Business Administration. On the federal side, we're also funded by the State of California Economic Development arm of the governor's office, which is called GoBiz. And because of this funding, we come to small and medium-sized businesses and entrepreneurs at no cost. So it doesn't cost anything to work with us, to have us help you. We do these events like this, like workshops, and also like video webinars and stuff like that, a lot of trainings. We can do some market research for you, and we can help you start and grow, create jobs, all that great stuff. And then we're all over California. So our territory, Northern California, we cover the most 36 northern counties of the state. So we go from the Oregon border down the coast to Santa Cruz. We cover all 9 counties of the Bay Area. We go southeast to Stockton, then back up to the Nevada-Oregon border. So those are 36 counties that we cover. But there are about, we have 18 service centers in that 36 counties. And then throughout the state of California, there's about 65 or 70 S.B.D.C centers. And in the nation, there's 1,000 of us, 1,000 centers. So we're a national organization. All right, cool. So we're going to jump into, obviously this presentation is, it's a little bit accelerated. There's a lot of slides. There's a little bit of time. You can keep it as engaged as you like. You can ask me questions as I go through the slides. I will unfortunately talk a little bit too fast, so you can tell me to slow down, or you can just ask questions, or you can make fun of me, Stacy. But this is, we're going to talk about business lending options, and obviously there's a lot of business lending options out there, being that there's about 6,000 banks across the country, and then there's a lot of nonprofit lenders, which we have a lot here today, which is exciting. But I feel that there is essentially money out there for everyone, and we can talk about that. So the lending landscape, this is like essentially your odds when you go out there and apply for capital, and when you're working with different lending and funding sources of capital. So angels and venture capitalists, you really only have about like a 1% to 2% chance of actually getting funding from these individuals. It's extremely hard, almost as hard as it is to get into the MBA. I was watching somebody talk in one of our new webinars, our tech team, and he mentioned that it's the same amount of odds. Like to get into the MBA, it's about a 1% chance, and to get money from an angel or VC, it's about a 1% chance, which I didn't know. But big banks, like top 5 big banks, it's about a 25% chance. So for every 4 loans that they throw against the wall and see what sticks, only 1 really gets funded. A lot get approved, but only 1 gets funded out of 4. And then small community banks. Crowdfunding is, we can talk about that a little bit later, but alternative lenders is anything that's not a bank. So we have some alternative lenders in here, depending on how they underwrite and they work with you. There is more odds, better chances. And then fintech lenders are lenders that are online, the ones you don't see, the ones that email you and text you and somehow get all your information. And they just interrogate you and they get you to say yes today because I want money today, and then you say yes, and then it costs you like 2,000%, and then you don't know what happened. That's those ones. All right, so there's a lot of guarantee programs out there that exist that you wouldn't necessarily know about as a business owner, but the one in the state of California is a California Loan Guarantee Program. It's through the Governor's Office of Economic Development. There's 2 of them. One is called iBank. And the other one is called CPCFA. It's under the Treasurer's Office. And these are loan guarantee programs for you as a small business owner. If the bank likes you, but they don't feel comfortable giving you the money, they need some sort of guarantee, they might go to the state and get a guarantee. And then, all right, you can just go to the next slide. So then SBA is the other most common form of guarantee capital out there. SBA is Small Business Administration. They have really 2 loan programs. 504, these internal numbers are they're just internal to SBA. You wouldn't necessarily go in there and say, hey, I want a 504 loan. But if you're looking to buy a building or build a building, it would be a 504 loan. And if you're looking to do anything else that's not building-esque, then it would be a 7A. Mostly like working capital if you need money to operate, or if you need money to hire people, or you need money for some equipment, you could do a 7A financing. And it's and these are just guarantees to the bank so that they feel comfortable essentially allowing you to access capital and stuff like that. Next slide. All right, so starting the loan process. The one thing I wanted to tell you regarding the loan guarantee process, something I do, sometimes it works. All right, so this is like a credit box for a bank or lender. It's really small, it's really tiny, because they have credit, collateral, cash flow, and then credibility, right? They got all these things. And they want to do your loan, but one of these things is not super strong. So they reach out to the state of California, or they reach out to SBA and ask for a guarantee, and essentially it insures the loan. So in case you don't pay it back or you go out of business, they are covered. That's what that does. That's what the guarantee loans do. So when you're starting your loan process, it's it's good to kind of figure out where to start and find out if you're bankable or fundable or can you really afford a loan, stuff like that. And then next slide. Sorry, get kind of hot here. And then there's different business loan terms in case like what you're looking for, what type of finance you're looking for, whether you're looking for like short-term capital, something that's under 1 year or under 10 years. And then there's different terms. If you're looking to buy a building or do construction, it could be up to 10, 15, 25 years. And next slide. All right, so I looked up the current rates before we got here, and these are just SBA loan rates. So for a 7A loan, it's these are a combination of SBA and a combination of conventional financing. So conventional financing is where the bank doesn't need a guarantee to do your loan, like they don't need like a state guarantee or they don't need a federal guarantee to do your loan. And most banks will give you a rate anywhere between one of these types of financing. So it could be the 10-year treasury rate, it could be the prime rate, it could be a conventional rate that they just get to make up. And then if you're looking to buy a building loan, the SBA 504 loans rates are there. So if you're looking to finance a building. Next slide. All right. Okay, cool. So these are, I don't know, I missed the title on here. So these are current statewide lenders that, I mean, United Midwest Bank is they're a national lender, so they'll lend to startups and they'll lend to existing businesses. So you could file your corporation today and get, and apply for funding. They'll finance you. They specialize in quick little SBA loans, 20 to 150. And then Five Star Bank, they do national lending. They'll do quick financing loans. And then First Bank, they specialize in franchises. And then Lendistry, they'll do, they're a national SBA lender as well. Next slide. So if you don't qualify for traditional bank financing, there's a lot of alternative financing out there. There's some that charge you a bunch of money, and there's some that are not so great to take advantage of. But sometimes business owners will come to us and they'll say, "Hey, I already did this type of financing," and we'll find out it's extremely high interest rate. It's almost impossible to get out of, and but you can have great credit and no business plan, no job, no pretty much anything except for just like a heart rate and a good credit score, and you can get like credit card financing. If you sell to other businesses or you sell to government, you can get factoring or invoice financing. And then if you have some sort of collateral, you can do a collateral-based financing as well. Crowdfunding. So crowdfunding was really hot about 8 years ago. It's lost some steam, but essentially it's just like if all of us got together as a crowd or as a group of people and put money in a pot and said, "Hey, we want to finance like a new social platform, or we want to finance like a local community event or a local community theater, or we want to finance like this new backpack for schools or whatever." You can launch your product and get a group of people excited about it to launch it. Next slide. And this is, so these are funders that are, and then there's a bunch of funders here that you're going to learn about as well, but these are the ones that we work with through all the state of California for S.B.D.Cs. Fundica is they're a platform on our website. They offer grants and tax credits for businesses, so you can find it per your industry and per zip code. Working Solutions, we work with a lot. They do loans between $5,000 and $100,000 for startups. TMC Community Capital, they're a micro lender. So Working Solutions, you could file your corporation today and get a loan. TMC, you have to be in business for 1 year to get that loan, but they do smaller amounts, $5,000 to $50,000. Lendistry, they're national, but they do a lot of statewide financing. They also do contract financing, very similar to like accounts receivables and invoice financing. And then again, United Midwest Bank. Next slide. All right, so there's a bunch of stuff on here. I'm sure Nicole's going to give you access to all the slides. But I feel that there's money out there for everyone, and that 90% of the people that apply for capital can actually get it. If they work with an S.B.D.C. or they work with another TA provider like the Women's Business Centers or SCORE or the Veterans Business Center, or they partner with SBA, I feel that there's all these different types of lending. You just have to kind of go through the process and figure out what's best for you. Next slide. All right, so qualifying for a loan, I feel that a lot of lenders that partner with SBA, they'll just blame SBA for you not being able to get a loan, and I think it's because it's easy for the bank to just say, hey, we can't get your loan approved because SBA declined you, and it's mostly not true, because SBA wants to do loans. They want to guarantee loans all day long. They go to the White House every year and they ask for a bigger pot to lend on. And I think it's just an excuse for the bank to say, we don't really want to do your loan. Like, we don't like your baby, we don't like your business, we don't like your gas station, we don't like your credit score. But they just say, well, it's just easy blanketed to say that SBA said no. So, yeah, next slide. There are reasons why banks will decline loans. They'll decline it based on, again, they don't like the restaurant at this time, they don't like gas stations. You can't pay back the loan. Your credit is not good enough. You don't have enough collateral. You could actually have great cash flow, great credit, and great collateral, but have no industry experience, and they won't lend to you. So it's good to have like culmination of all this, kind of a bit of a mix. And then also time in business. Some lenders won't lend to you if you haven't been in business 1 year, 2 year, or 3 years. So it's good to know that. Next slide. So looking at if you're ready to apply for a loan, Chris Horton is going to come up here on the next panel from SBA. He's hopefully going to mention that he has these loan readiness courses that are really cool. But as far as seeing if you're ready to apply for a loan or get a loan, you just really need to understand if you're a startup or in your existing business. And I know it would seem simple to you to see if you're a startup, but there's a lot of people, a lot of business owners that have these side hustles, and they're like making stuff out of their garage and they're selling it, but they're not putting it on their taxes, so therefore it's not legal. So if you were to go try to get a loan and you had no financials or no historicals, you're technically a startup, even though you've been doing it for 20 years in your garage. I'm sorry, but like if you didn't put it on your taxes, then it's not legal, and they have no way of proving you that you have income. It's good to know your business model and your industry experience. It's really good to know how much you want. Bankers and lenders will laugh at you if you say like, hey, I don't know how much I want. Just whatever you can get me. I don't care. If it's $1 million, if it's $10, I don't care. So you should know kind of what you want, what you're going to spend it on. You should know what's on your credit, because they won't really take you seriously if you don't know. But they are going to find out. There's some things on here that you can lie about, but you can't lie about your credit. Or if you commit a felony, like they are going to find out that kind of stuff. You should know how much you're worth, and if you've been turned down by a bank. Because this is really good to know. This is what I ask all of my clients is, have you been turned down by a bank and why? Because then I can work backwards. Because not all banks and lenders, you'll learn about this as you go through the process of getting financing, not all banks and lenders decline for the same reasons. And not all of them approve for the same reasons either. Next slide. So there is a paper that Nicole passed out that talks about the 5 C's of credit, and that's the most traditional way that lenders talk about credit and collateral and capital and all that. But what I come to find out in my 20 years of business finance is that they really just kind of start with these 3 things, and it doesn't matter what lender it is. It could be an online lender, it could be an in-person lender, it could be your grandma or anybody. But they just look at these things, like what is your credit score, what is on it, why is it there, why is it not there, why don't you have any credit cards, why don't you have a car loan, what happened to your house. They just want to know what's on your credit. It's because it's not really just about score, it's about like the story behind it. Like I have a 640 and this is why I have it. Usually anything under 740, there's something wrong with your credit, usually. And you need to explain it and know it. Collateral, like what do you have? Are you willing to secure it? Cash flow, can you pay it back? Whether you're a startup Most lenders, if you're a startup, they're not gonna take your projections as reality. You're not gonna make $1 million. You're not gonna make what you say you're gonna make, because it's all really just made up. So you're gonna need some sort of like secondary cash flow, whether it be your job. So if you have a job right now and you're starting a business, do not quit your job until you get your business loan, because the lenders, if you quit your job today and you apply and you say I'm going to make $1 million, then there's just no way to pay back that loan, because the projections again are all made up, and who knows what's going to happen in the future. But if you're an existing business, the cash flow would come from the business itself, and then as far as paying it back. Next slide. We don't have to go into this too much, but essentially there's reasons why your credit score is the score that it is, whether you have too much or you have too less. Usually there's always a story behind it. And an LOE is a letter of explanation, just explaining why your credit is that number. Next slide. All right, so all lenders want some sort of collateral, whether it's a, don't have it on here, but if you don't have a house, you don't have a car, and you're not willing to give your children up, then you can do what's called a UCC filing, a Universal Commercial Code. They essentially just take a lien on all your business assets. So if we ran a business and it was in this room, all the business assets would just be like the tables, the chairs, the carpets, all that stuff, and that would be like a universal lien on all those assets. So if we fail to pay back the loan or go out of business, they would just take all this stuff right here. But there's different types of collateral. You could do personal collateral, business collateral. You can do a state guarantee or a federal guarantee. Next slide. So we kind of went over this, the business collateral. Obviously, if you have a building, you could use that as collateral. Next slide. And then personal collateral, if you have a house, they may take a lien on your house. It depends on the lender. Not all lenders will take a lien on your house. There is a myth out there that SBA declines loans, which they don't. There's also a myth out there that you have to secure your house to get an SBA loan, and that's also not true. All that is dependent on the lender. It's not really dependent on you as a person or SBA. But if you owe more than 80% of what your house is worth, then you're okay. They're not going to take a lien on it. Like, there's no way they can ask for a lien. It has to be under 80%. And then obviously this is a joke. Like, children is really not collateral, but yeah, finance is boring, so just gotta throw that in there. All right, next slide. What'd you say?
More like a liability.
A liability, yeah. Like, costs a lot of money, yeah. All right, so for those of you that are looking for capital and you filed an extension on your taxes or your personal taxes, either way, business, personal, there are taxes that your tax person will do that makes you happy because you don't want to pay any taxes and you inflate your expenses, or you did some like shady stuff over here. But if you wanted to get a loan from a lender, then it'd be good for you to do right by your taxes. Show profit, make money, don't zero it out, don't negative it out based on, making your expenses too high and stuff like that. So just be cognizant of how you do your taxes for your business, whether you're starting or you're an existing business owner, so that you can qualify for a loan later. Next slide. This is what my business coach told me, or business, when I was in training: if the cash don't flow, the loan don't go. It's all about cash flow. Next slide. So cash flow is it's talked about in many different terms. It's talked about as having enough money to pay back the loan. Can you afford it? Can you afford it with a business? Can you afford it with your income? Can you afford it with your spouse's income if you're looking at global cash flow? And it's also known as debt to service coverage ratio. How much income do you have to service the debt that you're taking on? So big banks have they have a 1.25 to 1 ratio. Some big banks have like a 1.35 to 1 ratio. It just means that you have to make so like for a 1.25, if you make $1,250 a month, then all your expenses, including your new loan, is $1,000. So $1,250 divided by 1,000 is a 1.25 ratio. Negotiation range 1 to 125, small community banks. There are some nonprofit lenders that'll go lower than 1 to 1 ratio. Just have to have some really good projections, great business plan, and then they have to feel comfortable to lend to you. But there are ways to kind of like negotiate this if you work with the S.B.D.C and you work with the lender. Next slide. So business financials, you'll probably hear about this on the next for the next panel. As far as like what are they looking for to help you to apply for a loan. For those of you that are starting a business, it is important for you to have your W-2, your pay stub, so they can see how you're going to be able to pay back the loan. Obviously, you're going to need a personal financial statement to see what you're worth. And then S.B.D.Cs can help you with your business plan and your projections, stuff like that. Also, I've heard ChatGPT can help you with that as well. Next slide. Would you take a ChatGPT business plan, Ross?
Well, sometimes they're hidden pretty well.
Sometimes they're what?
They're hidden pretty well.
Oh, yeah, they are. Yeah. Sometimes you can't tell, right?
I can always tell.
Oh, you can always tell. Okay, awesome.
No,
You have a gift.
Yes.
Okay.
Nobody talks that way.
Okay.
Using words like robust.
Oh, okay. That's cool.
North Coast.
That's like a made-up word. No biggie. All right. So lenders are really just trying to calculate risks. They're just trying to see, like, can you pay back the loan? Like, what's going on with your credit? Do you have collateral? Like, why do you don't have collateral? Why do you have collateral? What's going on your credit score? And then if you can't pay back the loan by yourself, maybe your spouse can help you, or maybe a partner, or maybe your business can help you with that and kind of put it together. Next slide. All right, well, it is 6, so we don't need to go through the case studies.
That's fine.
Yeah.
Yeah, let's open it up for conversation. We've got a few more businesses that joined us too.
Oh, cool. Okay, awesome. Good stuff. Any questions?
Any questions?
I bought the company I work for, so now I didn't necessarily quit the job, but I own the job. I don't know what category that would put me in as far as I bought a sole prop and then closed it down and opened up a S Corp. So I don't know if that would be a startup or
Startup.
Oh, yeah, you're a startup. For
Just
sure.
that you formed a new entity to operate the existing business, so that makes it a startup.
Yeah. But you already bought it? So you got a loan, or you paid cash, or?
I got a private investor.
Oh, okay, cool. Yeah. So if you wanted to refinance that, then yeah, it'd be considered a startup. Yeah. You, sir?
And then ask, just in that case, will the historical tax returns help her with any loans to come? If she's applying for a loan to acquire more capital or something, if she has historical tax returns, does that help?
Does it depend on the lender, Stacy? Wouldn't it depend on the lender?
I mean, if she was come to me to buy that business, then yes, the historical tax returns would matter a lot. But if she comes to me now and says, hey, I need some working capital, it might influence us when we look at her projections to see what were these based on, but we're not gonna give it the same credit because it's not her business anymore. I mean, it's
not
yours
the same
now, it's not
business,
the previous owner's business anymore.
Yeah.
So elaborate on that piece right there, because that's a new owner that's running and operating the business as opposed to the previous owner.
But I'm certainly one to see them, because if you're telling me, I'm looking at your projections and you're a startup, I'm like, how come you think you're gonna be this, jump this quickly? And you would say, well, this was an existing business, look at the seller's taxes. So it would impact my evaluation of your projections.
Would it make any difference that I took over the company before I bought it as well?
I'm not getting
Like the
audience.
projections changed when I took over?
Well, no, I mean, it matters, cause that gives you credibility as an owner, but it doesn't change the fact that you're still in the business and you have no historical tax return.
Okay.
So I think at this point, we're gonna pause, just because we want the microphones to pick up, yeah. So if you're a part of the panel, let's go ahead and move up to the front.
And I have one we can pass around.
Okay, great.
Check, 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 check. 1, 2, 2, 2, 2. There we go.
Oh, thank you. Oh, you did? Cool.
Yeah, check, check.
Here we go. We'll see.
I am gonna take a look at this stuff. Ross is delivering your prompt. What's your prompt?
You would grab my pen? What'd you say? Oh, shit.
Yeah?
Yeah.
Except for I'm not tall enough to sit over the top of the.
Chris, you wanna come on up?
Oh, sure.
We are I saw.
Gurner. Yep. Put the dangerous pair of dudes next to each other. I don't think it's wise. If we can divulge into like comic relief, then
Once in a
we're
while,
winning.
right?
I should have brought my team.
Why not?
Oh. Did it grow?
It did.
It grew. Okay.
You do. You have an extra one tonight.
Swamp, you want
Okay.
So,
Anybody
So
want
we
my
have,
mic?
I know Stacy, I know Ross, I know Robert, I know Chris, and then Chevrolet. Chevy? Or Chevy? Chevy. You're Chevy.
Yep, I am.
And then
Gonna share. He told
Oh,
me share.
Brian. Brian, kill it.
Brian.
Red,
what?
no one ever say my name, so I should have become.
Oh, Red was
Yeah, Brian, kill it. Yeah, I think we met. Yeah, okay.
There we go. Redwood. Okay, cool. Awesome.
I think I crashed it, but that's what we do, you know.
You got okay.
Yeah,
That's what you do. Okay.
I just search for financial discussions and I come in.
That's awesome. You just find him.
I just find them. Yeah, this is the third one of the day, actually.
Peek in. Okay. All right, cool. So we have an awesome lender funder panel here. So what we'll do is we'll just have everybody introduce themselves, the organization that they represent, and then we'll go to we'll just go down and ask some other questions. But yeah, if you just say your name, the organization you represent, what you do, what your organization is all about, and then yeah, we'll go to other questions. So we'll start with you, Chris.
So my name's Chris Horton, and I am your district director for the United States Small Business Administration. I'm in the San Francisco district, so if you start down in Santa Cruz and you go up the coast all the way to the Oregon border, that's the territory that I cover. The SBA, we are here to help support small businesses through all phases of the business life cycle, from ideation, startup, growth, mature, and transition, which is that exit strategy succession planning. So we provide all the tools and resources and subject matter experts that you would need to accomplish any of those things or to overcome any challenges and barriers that you're doing.
Awesome. Thank you very much. And the guy that just
mic right there, sir.
scrolled in.
Perfect. Brian Kilkenny with Redwood Credit Union. I manage our lending team in Santa Rosa. We have headquarters in Santa Rosa, now also another headquarters in Napa. And I would say, I mean, again, a great question you asked. I think it's a good group of people to ask, but your scenario is a good one in that I think it shows the complexity of everyone's needs, right? Everyone's kind of in a different position, but I think anybody who's associated with the S.B.D.Cs, the CDFIs, SBA is interested in helping, right? And I think there's a lot of times that people are get a little overwhelmed or nervous about banking in general. But I think that again, hopefully, what you hear today and see with this is that it's a community to help the community. That's why a lot of us are in it and involved in it. And so again, I think that was like a perfect question to because it's the nuance to all of it. So we're a lender that is proudly a participant of the SBA. And everything that they stand for, we try to mirror that. So again, you will find, I think, quite a few, and just by the response of the panel that's here, there's a lot of people out there to help small businesses. So, yeah, happy to be here, even if I had to crash.
Thank you.
All right. I'm Robert Gernert. I'm the Executive Director and Lending Manager at the Economic Development Finance Corporation, EDFC. We're a nonprofit that's turned 30 this year, and also a CDFI, so an alternative lender helping build the community in Lake Mendocino and Sonoma County. So we fund anything from startup to existing businesses. Really where the bank won't, we try to say yes. So that's kind of in the same vein as the SBA, as we want to find a reason to say yes to help you get into business and grow your business. and support the community in developing economic, prosperity in our counties.
All right, Ross, take it away. You're Chatty G's best friend.
Yes. So I'm Ross Welch, Executive Director of North Edge. We just changed our name after 47 years. We were known as Arcade Economic Development Corporation, which takes too long to say and too hard to explain.
Mic a little closer, sir?
Oh, I thought this was just for the recording.
That's what they're trying to record you.
Oh, sorry.
It's your first time?
Huh? And this is going to be on your website. That's terrific. So much for rhythm. Anyway, so we cover 6 counties, which includes Humboldt, Del Norte, Mendocino, Lake, Trinity, and Siskiyou. We've been around 47 years. We participate on almost everything that there is. So we have the whole suite of SBA products, which is we're a microloan lender, a 7A lender, and a 504 lender. And just a little aside on the 504s, you need to have a third-party lender, which is a bank or a credit union. So we work with all of them closely. We're not a fintech, so we look at each loan individually, which is kind of important because a lot of times you ask questions like that and it doesn't fit in the little pachinko bing, 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 bing. So we could actually talk to you. We have a couple ex-bankers, and I'm one of them, on staff. So we're very familiar what they're going to take or what they're not, but we'll also call them up and say, hey, will you do this one? And they call us saying, look, we consider this a startup. Will you consider it? So we'll look at it. So we also, it's important because we do iBank guarantees, SBA guarantees, and we're also BIA guarantee lenders, which is Bureau of Indian Affairs. So we've done a bunch up in Humboldt County. So that's kind of important too. So, and also a USDA microloan lender because we can. So I'm just going to leave it at that. But doing this so long, and I was a banker on 3 of these counties, which is Savings Bank and Humboldt Bank and Bank of America when it used to be here. So it's, we kind of know what they like and what they don't like. But sometimes you just need to talk to someone saying, hey, this is what I got. What do you think? And we can answer without going through a little matrix. Anyway, that's it for now.
Thanks, Ross. Move it over to Chevy.
Suckers, come on.
Hi. So my name is Chevrolet Laumipo. So it's mouthful, so go by Chevy. So I know quite a few of you in this room already. I'm with Umpqua Bank in Kelseyville. We're passionate about a small business. And we want to help our customer to grow, help our community to grow. So that's how we like people to help. There's a variety of loans and line that we offer for small businesses. We also have like an SBA, business line of credit, business loan, equipment financing that will be able to help you out. Sometimes, a lot of stuff just doesn't fit in the box. So, but what we can do is help you to grow and kind of get you ready to take the next step. Sometimes it takes time, but that's a fun part of banking. So you get to grow with the customers and you get to help them develop their business plans. Just kind of never say never, everything's in the pipe and we kind of work with you to get you to where you want to go. So.
All right, Stacy.
Hi, I'm Stacy Sanchez, and I'm a senior loan officer with S.B.D.C Small Business Finance. We're a private nonprofit. I'm one of those alternative lenders that was mentioned earlier. We're a SBA 7A lender. We're a national lender, $25,000 to $350,000. We do startups, business acquisitions, debt refinance, working capital equipment, all the usual reasons that somebody gets an SBA loan. We're a preferred lender, and we're also an SBA micro lender. So we do micro loans in California, $10,000 to $50,000. We do have a CDFI product as well for businesses that don't fit in the SBA 7A product. I'm based in Reading, so I've never been out this way, but it was a nice drive, a little bit longer than I expected, but it was really nice. So I appreciate you having me out here. I've been with the company for 22 years, so I can speak to lots of different loans that we've done over the years, but people come to us because they can't get a bank loan for one reason or another, typically, or a traditional loan, one reason or another.
Awesome, thank you. Chris, so,
Scott,
oh yes.
Before we do that, can we quickly maybe pass the microphone? I just wanted the other financial institutions that are in the room to say a quick
Oh yeah,
introduction
definitely, yeah.
so that we know all the.
Perfect.
So, Becky and Stephanie, maybe?
I'm Becky. I'm the branch manager at Redwood Credit Union here in Lower Lake.
And I used to work with Becky. Stephanie Ashworth, I'm with BMO, formerly Bank of the West. And I do commercial lending for small businesses, typically annual revenue from 1 to 10 million, right in there. I can do lending up to $1 million. So been in Lake County for about 30 years, used to work with Wells Fargo, so I've been working with small businesses for quite a long time, 15 plus years. So that's about it. Oh, and I'm also on the board with the EDC. Are you going to talk about our program?
Yes, we will. You guys.
Okay. My name's Marisa Redding, and I am the relationship banker here at Umpqua Bank in Lakeport. Basically, everything that Chevy had said about what we, like to do, and our whole motto is basically trying to help any small business that comes in and needs any assistance, and we'll go, whatever mile that we need to go to, which is lovely that you guys are all here so that I can get to meet all of you guys and see what other, places that I can recommend people to go talk to if we can't help them, So, yeah, I think this is a good thing.
Hi, I'm Carrie Jones. I work with American Ag Credit. We do a variety of ag financing, anywhere from operating loans, land loans, equipment loans. Been doing ag lending for over 17 years now. Prior to American Ag Credit, I worked for the Farm Service Agency for quite a long stint. Yeah.
Great. Andy, you want to talk a little bit about the program?
Thank you. Hello, everybody. Sorry I was manning the door down below. We had to make sure that people could come in. So my name is Andy Lucas. I'm with Community Development Services. We work with the Lake County Economic Development Corporation and Small Business Development Center, as well as local jurisdictions like the County of Lake and City of Lakeport. And we do technical assistance for businesses. So that means preparations to access capital, putting together a solid application, putting together projections, all the things that you may need for applying to a lender. We also operate the Economic Development Corporation's business loan program. We do underwriting with Nicole. Stephanie's on the board. So that is as an alternative option to the traditional banks. It's a community benefit program where the EDC borrows from the USDA and loans it out to businesses. And as it gets repaid, it's repaid back to the USDA. And the whole idea is to create jobs, retain jobs, and support businesses that may or may not be able to get that traditional financing. We also operate various programs for the County of Lake. City of Lakeport has a community development block grant program where they offer business loans if you create a job for a low, moderate income individual. So those are different programs that we like to partner with banks or traditional lenders on to help share the risk and get the business to where it needs to go. So that's me. Thanks. Thanks, Scott. Thank you, Nicole.
Thanks, Scott.
Oh yeah, you're welcome. Any more?
Oh.
Sorry. I'm late to the.
I'm sorry.
No worries. Hello, everybody. My name is David Thomasine, and I work with Rural First Farm Credit. We are the consumer purpose arm of Farm Credit here, and we help with any rural resident or kind of part-time farmer lending needs in the area. And I've been a part-time resident of Kelseyville for the past almost 12 years now, so I'm up here 12, 15 days a month at least. So.
Well, thank you for joining us. I'm sorry. Sorry I missed you.
I was late.
Okay.
All right, cool. Good stuff. You want to talk? No?
Oh, I'm going to hand it back to you.
All right, cool. Awesome. All right. Hey, Chris, since you're not a lender, you're not going to obviously talk about lending options that you have at SBA, but can you talk about how you work with banks and how that relationship works?
Sure. Yeah, it's pretty straightforward, right? It's meeting financial institutions and sharing with those financial institutions, the mission of the administration, right? And the mission of the administration is driving economies so that economies can thrive. The way that we do that is helping small businesses. And that are those mom and pop owner operators, that are those small businesses, one to few employees, and engaging in what their initiatives, what their priorities are. Understanding what industries they want to lend to and which industries they don't want to lend to. Understanding which products and services that we offer that they would be willing to offer as well. At the end of the day, it's one single goal. How do we ensure a comfort level for a financial institution to say yes to doing a deal to help you to get access to the funding that you need? Really simple, not complicated. The one thing I do want you to walk away from, though, in regards to the SBA, is that I need you to really realize and understand the work that we do is paid for by taxpayer dollars. So I need you to realize what that really means at the end of the day as a small business. You have already paid to have your own business consulting firm called the SBA. So whatever challenge you have or whatever opportunity you're pursuing, all you need to do is pick the phone up and go to your SBA and challenge this institution called the United States Small Business Administration to work for you.
Awesome. Look at that. Drop the mic. All right, Brian and the rest of the lenders, can you talk about the unique challenges and opportunities within rural commercial lending?
Sure, want me to start?
Yes.
Yeah.
Yep.
Yeah, I think it's I think Chris put it amazing. That's exactly what it is, and I would say that that's coming from the SBA, and I would say few better partnerships have I ever been or seen than financial institutions, private financial institutions, and the SBA. There is a dovetail. There isn't a battle. It is a true partnership. We succeed, they succeed, which is, i.e., the economy and the citizens succeed. And so it truly is, I think, takes a little bit of the edge off of a banking relationship, particularly because there is, I think Scott put it well, is that there's some security that comes along with that relationship to spur the economies. And I think the other thing is, a lot of people think small business, and that really doesn't necessarily mean anything by itself. It doesn't, small business could be 10 million, 20 million, 30 million. It could be 10,000, and it could be no employees, and it's just your individual business. I would say all of those businesses matter. Every one of those is going to get attention, and I think that they're having a well thought out plan. As getting to your question specifically with regards to rural lending, really very little difference in my opinion than the preparation needed if you were in downtown San Francisco. You have to have an idea, a concept. You have to be organized. I think you'll hear a lot of times around SBA lending, the extensive amount of time, or it's more time than conventional. Well, I think that might be true. It could potentially be true. It could also be quicker. But I think with that comes into play the story that needs to be told, the background. Like, the story matters in SBA lending. The story matters in all lending, but it matters, I want to say, more in SBA lending because we are potentially talking about it, projections, and we're talking about taking over a business. And so how what that history was of your experience within that industry before you then decided to take on the ownership of a business, or you want to grow from one location to two, or take on a different type of business, a different type of customer than you had been in the past. Having a well thought out thought, and that's why having these other resources that are truly there to help. The bank is there to help, but there's also some judging that goes on, and we all understand how that can be uncomfortable. These other partners are truly there to help build the story along with the SBA, to build that, to put you in the absolute best position to succeed. So I would say the time thing, don't let that be a deterrent. Use that as kind of the why, and the why is that story matters, being organized, understanding your credit. I think that's a great thing that we all as just citizens should have some ownership in, and not only that is created through our story, but that there's a story there too about how you got there. So don't be afraid if there's blemishes on that, or if there's challenges, because again, there can be a story told, and it's how you organize that. So I would say, again, getting back to it is really just take take the opportunity for what it is, and if you're looking for financing, to have some conversations with some non-lenders that are involved in this, as well as some lenders, and being forthright and being upfront about what your goal is, why you want to do it. That passion is going to come through, and if there really isn't much passion, and you just, you know, then it's a different story, and it's a different path that maybe you head down. But don't be afraid to ask the questions, and then again, give yourself enough time to succeed in the process. So it's not a long, drawn-out, torturous period of time. It's an opportunity to organize yourself. So
Thank you, Rob. Brian, and then we'll go to Robert.
So you said unique challenges in rural.
Yes, if it's any, that you experience as a lender, that's a little bit different than regular financing.
I think operating in rural Northern California, you get geographic pockets of business and community that's entirely different from one that's 30 miles away. How Fort Bragg operates as opposed to Ukiah is entirely different. The seasonality between businesses, and we really have to have you tell the story so we can understand that. Oftentimes, after doing it for several years, you kind of understand if somebody's going to open a restaurant in Fort Bragg, it's going to be dead from November through February. And so we'll structure a loan to account for some of that. But before, and the wild difference in industry, there's so many different, you get a whole spectrum of things going on in just a small county. You look at Mendocino County, and it's relatively small population-wise, but spread out geographically so far, and you have to know kind of the temperature and tone of each little pocket of community, so that if you're opening a coffee shop, we're not trying to put out a business, the mom and pop coffee shop 2 blocks away, who's been there for 30. We might try to divert you into a path that's more successful, or how can you partner, how can you complement, and being able to talk about that and work through those things are why we exist. Because the one bank in town might know, because they bank with that one bank in town, and they're not going to put their current client out of business or at a loss to lend new money. But if you had something that complements it, then you have that opportunity. And what we found even more recently is the legalization of cannabis has drastically dropped the profits from that. The cash doesn't flow the same as it used to. And a lot of people that even I went to high school with, I'm going to be 42, have never had legitimate employment throughout most of their adult life. So they're going to go start a business. But the education, the financial education level, they come in and say, I need $50,000. They're used to being like, yeah, sure, I'll give it to you, pay me back whenever. And there's more structure. Obviously, we might be an alternative financer, but there's structure around what we do. And so you say business plan, and they say, huh? Or you say financial projections, and you're like, what do you mean? So there's an education gap. People are entering the market way later than in their adulthood than people who've been through business classes in college or think they were going to be serial entrepreneurs. They're pivoting on an industry that has no more cash. So they're trying to do something new there, and I can respect that. But we have to help as lenders and the SBA, the S.B.D.Cs, bring up their education level so that they can operate a successful business, because we don't want to lend money to sink you. Collateral is a thing, but I tell every client, I don't want your car. I don't want your house. I don't want to go into a restaurant. We've been into a couple of restaurants where we have to hold their chairs and their ovens and everything else. They don't sell. We pay the storage fees, and they sit there. So it's the last thing we want to do. So we want to set you up for as much success as possible on the front end. That's why I think you spoke to the timeline. A lot of people are like, man, this has taken a lot longer than we wanted it to. But we want to make sure we've set you up. It's not to say no, it's to set you up to succeed as best as possible before you get the money, not get the money and hope for the best. Yeah. But that's some of the things that I've seen lately.
Thank you. All right, Ross, you been taking notes? You know what to say now?
Yes, I do.
Perfect. It's your turn.
I'm going to try to keep it short. What was the question?
Exactly. Right? Yes. You've been doing this for 40 years. You know all about
yes.
rural, right?
So I'm
yes.
going to tell you.
Okay,
Well,
tell,
you're asking
tell
it-
them. Just tell them, not me.
Well, but I'm going to tell them what they maybe already know.
You have to get the mic.
Just a tad bit. I made you hot, so just a tad bit closer.
I'm hot. It's all right. I've been on the planet probably for longer than most people here. My last stop with Bank of America was up in Crescent City. So your question was blah, 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 blah.
Is the unique opportunities and challenges with rural lending?
We don't have the lenders we used to have. And then they invented this thing, we call it the internet. So everyone's doing it online now. So I'm going to give you an example. When my last stop with Del Norte County in Crescent City, we had Wells Fargo, we had Bank of America, Great Western, all these places. And you could go in there and chat it up, find out what about this, da 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 da. That went the way of the dodo. They have, I think, Tri-County. Nobody else, really. Oh, they got the credit union, who we partnered with up there for different programs. So just really big, that has made a difference. You just can't walk in like in the olden days when I started. We had new business how-tos and stuff at Bank of America. We had tons of stuff. That's not there anymore. So I wasn't joking when I said, if you could just talk to a humanoid to find out, is this the place I should go first or not? Everything is internet-based, not everything, but that's kind of where we're going. But what happens is sometimes someone they happen to fit all the boxes. Their credit's okay, this is okay, I've been in business for a year, that fits. I can get a $25,000 SBA 7A loan from Doo-Wackadoo out of Atlanta. And like, great, you guys wanted to ask questions. So some slip through and they get that loan. Was that enough? I don't know. And can you talk to them? Maybe. But sometimes, because we're pretty well connected with the banks and the credit unions and what's going on in our area, I'm not saying the whole state, just the 6 counties we do and the counties that you do. It's like, well, did you check this? Did you go over to the city and see if you got a permit for it? Because we got this business plan the other day, and the person who wrote it up, and they paid him money to bring it in and all this stuff. And my millennial person, she's going like this because she flips houses and stuff. It's like, that's not zoned for this. And they go, well, I feel good about it. It's like, I'm okay, but it's not zoned for what you're asking to do. So you go check with the city, and we'll check to see if we can do the other thing that you asked about. But we already knew the city's going to say, no, it's zoned residential. We're not going to change it for this reason. So that would have saved a buttload of money if they had talked a little bit sooner on it. So I'm not going to talk too long on it, but mostly we don't have the options that we used to do. However, you do have, I'm going to give you a plug, the SBA and S.B.D.C. Their programs online are kind of amazing. In the past, if you wanted to kind of learn some stuff, you had to go on Tuesday nights for 3 months, 3 months in a row and learn about this, and then you didn't make it. Like, now you can go through all these things, just click through them, learn as much as you can. And that's my only thing I wanted to say here is learn as much about your business as you can, and just become one with the business and learn more than I know about your business, and you will be successful. Then the money part, we could do the 1.25, 1.15. All right, that's it.
Perfect. Crushed it. So you're natural. All right, Chevy, your turn.
All right, so 5 C's of credit. That's important, right? We all go by those. Sometimes you have a great vision of how your business want to be, what it's going to look like. But then sometimes when your CPA tell you, like, hey, you make $1 million in gross, but by the time you write off all the expenses, everything, you said you're making $40,000. So then capacity could become the issues. So with our area right now, that's what I be running to a lot, because you can have $1 million business. You said you're making $20,000. It's good for you when you file the tax return, right? But when you go to lending, though, we have to look at that. Like, wow, you're not going to be able to, capacity is not there. So that's one thing that I want to caution for like a small business. You're going to balance it out. You're going to balance what you want to show and what you actually did, because that will come back and bite you, to be honest with you. One thing that I like about what we do at the Umpqua Bank, though, with every loan packages we submitted in, we require to have something called loan story. And loan story is where I come in, Mariasa come in, right? We tell the story of your business, your background. So let's say everything's right there, or the 5 C's, almost there. You right there on the edge. You right there, like, can go either way. Can be decline, can be approval. Now, if you explain to me your business, I understand your business, I understand your background, where you're coming from, I'll be able to explain, tell your story to the underwriter and say, hey, this is where they're coming from. They only had this business for 2 years, but their family owned similar type of business for 20-some years. She grew up, she worked in that business, she know the business in and out. So that's what make it different, right? I mean, so one thing that I would say, talk to your CPA, make sure you show what you need to show. Because your CPA not going to know you're going to want to get a loan or anything like that, but they're going to want to make sure that save your money, right, on the tax return, that kind of thing. But that will come back and bite you. So.
Thank you. All right, Stacey, take us home.
Well, so in an effort to encourage banks or SBA lenders to make smaller loans, SBA came up with what they called a small loan. And they created this program called the SBA Predictive Index Number. And if you're a small lender, meaning you make loans under $350,000, you have to have the borrower has to have a minimum SBA Predictive Index Number in order to qualify. Well, effective June 1st, that number went up. They basically raised the bar. And as a preferred lender, we used to be able to submit to the SBA loans that didn't meet that minimum SBA predictive index number as a preferred lender. So in SBA lending, if you're a preferred lender, it means that you can actually put the SBA guarantee in place without the SBA actually reviewing the file. So your internal approval, you submit it to the SBA and you check the right boxes and you get an approval. If you don't go preferred, you submit it to the SBA and then they review the file and let you know if they're going to put the guarantee in place. Well, with the changes to the SOP that went into effect June 1, if you're a preferred SBA lender, if they don't meet the minimum SBA predictive index number, I can't help them. So that's a new challenge. Sorry, Chris, but that's, I'm not particularly happy about that, but it is a new challenge for preferred lenders that make community advantage lenders loans under $350,000. We're all under the small loan SOP. The other big new challenge is that merchant cash advances, those loans that unfortunately people get sucked into because they're so easy to get. And if you're online and you're looking at your taxes or you're looking at a loan, these lenders are on you. And it's super easy. They don't care about your credit. They just are going to advance you based on your sales. So those are no longer eligible to be refinanced under SBA. And I don't really know who's doing them, who's refinancing them anymore. And nobody is. So unfortunately, I'm seeing applications for people who have loans that are, $10,000 a month for a loan they took out, and they can't repay it, and they can't get it refinanced, and you can't go to the Consumer Protection Financial Agency and complain about it because that's not really an agency anymore. So that's a big challenge for small business lenders and for small businesses who aren't aware that if you take out a merchant cash advance, it could be, the death of your business, basically. So sorry to be the downer over here, but that's a real big challenge out there, and it's important that small businesses know that you take these loans out, and it used to be there's a lot of brokers out there pushing these deals because you can get them refinanced, no problem, but you can't anymore. So it's, it is something that everybody needs to be aware of.
Yeah, thanks. So the lenders that are online, the predatory lenders, they're not regulated yet.
Because they're not lenders. It's an advance.
Yeah. Those are advances, but there are other fintech lenders. Yeah, but those, the advance, yes. And then the problem is that you can get that money next day, sometimes same day. You just give them your account number, boom, it's in your account. Like when you go to a bank or traditional lender or nonprofit lender, like on the panel here, it's going to take time to get financing. You should start sooner than you think when you need the financing. You have to know it's going to take more money than you think it's going to take, and it's going to take longer for you to get the financing than you think it's going to take. But anything that's not a building loan is going to take, from the time that you apply to the time that you get the financing, for most like operating capital, it's going to take 30 to 90 days. From the time that you apply to the time that you get the money, it's going to take about 30 to 90 days. Brian mentioned that maybe SBA at times could be faster. If you have all your paperwork in, the financials I talked about, if you bring all that in the same day that you apply, it will accelerate the time that you get your money. Because that's what takes the longest time, is that. It's not SBA trying to figure out their SOPs. Because it's online, you can find their SOPs, it's in statute, it's in law, and they don't change them that much. They just, Stacey talked about some ones that actually changed yesterday. Dramatically changed yesterday. But for the most part, if you have all your financials, you do a lot of the stuff that Robert talked about, Brian talked about, as far as having everything up front, doing your homework, asking the questions, all that good stuff, and what Ross said, making it your passion. If you have all that and you come to the table and you say, hey, I'm ready to apply, I did the numbers, I did my homework, I talked to who I need to talk to, then it won't take as long.
Correct.
But it's not going to take same day like on the fintech that you can get, unfortunately.
I did want to say something real quick.
So I want to make certain that everyone really understands something as far as SBA lending. What I haven't heard from my panel here with me just yet is the SBA is meant to be the lender of last resort, not the lender of first resort. So the lenders are responsible. We have a specific requirement that you couldn't receive credit, you couldn't secure credit elsewhere. That's a requirement for these lenders to prove to us in order for us to be able to exercise that guarantee. So you're starting off wrong if you're starting off thinking SBA is where I should start. Where you should start is with your financial institution, with your S.B.D.C, with your score counselors, to find out about what it is that you're looking for, what dollar amount you're looking for, what's the use of those proceeds, what's the primary and secondary sources of repayment, and have someone do that work first before you say, I want to go SBA. Because if you can get credit elsewhere, we're not guaranteeing your lender. So when your lender then comes back and says, SBA denied you, well, you're not my customer. They're my customer. I denied them. So just be very clear, because the way the conversation is sounding is that you're going and you're seeking an SBA loan. They should be the ones engaging in the conversation about SBA being the way that they need to go, because they couldn't do it with their traditional or their conventional lending. You don't fit, they're not comfortable, whatever the case may be. Alternative is not an option for you. Now we're looking at SBA. So let's just make certain that everyone fully understands that also.
Can I pipe? Oh,
sorry. A lot of the alternative lenders have the same general guideline, is that they need to be turned down from a traditional source first, so that we can, I think that's probably at a federal level where they set that criteria for USDA funds or, Treasury funds through CDFI. We're looking for you to have done homework before and tried to go to your normal bank. Our funds are specific for people who cannot access traditional financing, so we don't want a really good bank loan to come through our door. I mean, it sounds great, and the only time that seemed really advantageous was during the pandemic when traditional lenders got really, we didn't know what the lay of the land looked like, so there were some overqualified borrowers being turned down from banks, and not to their fault. They were just being ultra conservative, understanding that we didn't know what was coming in the future, where we got the opportunity to lend to some and kind of bolster, I would say, the portfolio to help some of these people who should be in the traditional, and most of them have refinanced out of our system because things eased and they got better money somewhere else. And we always encourage it. If our rates and terms are not conducive because we're a higher risk lender, refinance as soon as possible. We don't have any fees attached to paying off early or prepayment penalties. So by all means, please do.
Exactly.
And go to your normal lender and pay off, so that we can kind of recycle the money and keep going.
Exactly. Well, Community Advantage was created with the idea that you would have it, and then in a couple of years or whatever, you'd be bankable.
so that you could go and get a better rate. And the rates do tend to be higher than what you would get at a financial institution for an SBA loan.
That's the whole thing. We have a symbiotic relationship with our banks and credit unions. Because we charge more than they do. And that's why they support us financially, because they know we're not taking their prime business, but we don't anyway.
Right.
So as soon as typically for us it's a startup, and so the banks want at least 2, some want 3 years of tax returns. Well, if they don't have it, all right, they come to us, but you're going to pay more for it. So as soon as they're ready, we're always saying, like, have you checked with the bank yet? Because that'll save you money. And they go back to the bank and say, well, no, they don't like us now. It's like, whatever it is, that's okay, but try this one. And then if not, we can keep it. But we've always, it's rare, but every once in a while we'll get one that's like, man, you're bankable. You know, you need to go over here. I know I'm a nice guy and everything, and I talk a lot, but.
Well, and I think to touch on Chris, he's 100% correct, obviously. And I think we sort of probably jumped into a new business, almost like a new business seminar, where oftentimes the lack of historical, to Rob's point, lack of historical financial performance is, that would be that meaning that credit elsewhere, as he's referring to. But again, it is one of many options that are going to be available at a bank, and ultimately, if there is a way to get it done from a conventional standpoint and non-SBA, then not only is that the direction we're going to go, it's the direction we have to go, to his point. So again, I think we did jump into probably like more of a financing a new business or a startup. But there is, and again, having those conversations, finding out what your options are, and I think you'd be surprised. A lot of businesses are that there are a lot more resources out there, so long as you kind of search them out and be your own advocate, whether it be through the SBA or a non-traditional lender. But again, anybody who's in this small business space can kind of help you navigate through that, and I think present today.
I'm going to jump in here real quick. I know we're running a little short on time, and I wanted to sort of connect Chris's first comment to his last comment. So in the beginning, he said, use your taxpayers' money, right? SBA funds a lot of different programs, one of which is guarantees through the banks. Another is the S.B.D.C's technical assistance. So through my office, we have a whole team of advisors that help with lending, but they help with all sorts of things. First of all, I want to make sure that you guys see this in your folders. And then on the back, there's a QR code to sign up for S.B.D.C. if you decide you want to use our services to help navigate some of what we're describing here. I want to tell a really brief story about a restaurant who speaks at our restaurant expo each year when we hold it in January. She has a business. She's a restaurant owner. She leased her business for several years, but her goal was always to buy a business. And she started early with an S.B.D.C advisor. And she had a checklist similar to this. So each year after she did her taxes, it went in a folder. Each time she updated her business plan, or if she changed her menu pricing, she put a new menu in this folder. It built the story of her business. Her literally the first day of business was in March of 2020. So she had to completely pivot the first thing. She had signed a lease, had to pay her lease payments all the way through COVID. Just recently, her prime restaurant location came on the market, and she called her local bank. She was not qualified for traditional lending because she was inside 3 years. However, she brought that folder with her and said, I need a loan to buy this property, and this is my whole story. And she had probably 95% of what's on this list, and it was a record-breaking SBA traditional partnership loan. She closed escrow, is now running 2 facilities. And so this, like, the moral behind that story is, she always wanted something that couldn't get taken away from her. She wanted to own the building, because the second a leaseholder decides they're going to sell the property or rent to someone else, she was out of business suddenly. So she was from the very get-go, she had that as her goal. And she had got some really great advice from her S.B.D.C advisor to start that folder, start that file from the beginning. So that's why we created this. It doesn't match perfectly probably with any one of these lenders, but I can tell you that if you have 95% of this, they're gonna be so happy to see you. You're gonna be their favorite client that month. So with that, I wanted to make sure you guys knew about how to sign up for our services. We're here to help you, not just with lending. We can help write the business plan, write a marketing plan, help you with social media. We can help you find a bookkeeper, all of the things related to businesses. So from there, I wanted to make sure we are running low on time, but I wanted to give the businesses in the room an opportunity to ask questions, or if there are other lenders that have additional comments to make. I just know that it's a school night and we might need to go home and do our chores, so. Or drive home, because I know the majority of this panel has a long drive after this, so.
Or underwrite alone tonight.
Or, yeah,
Tomorrow.
whatever.
Yeah.
Chores, homework, whatever.
All right, any questions for either one of the panelists or all the panelists? We can do rapid fire.
Does everybody have business cards?
Yes.
They better.
They're $1 a piece.
For $1, yeah.
We're a nonprofit.
If I'm a business owner and I'm coming to a bank or a non-traditional lender for a loan, do I need to bring any of my own money to the deal?
Yes.
How much?
It depends. Depends, but typically 20% of what
Okay.
you're asking
For
for.
a startup?
For a startup.
For a startup, if you're starting your business, the question was, how much money of your own money do you have to bring to the table to get the loan? So if you're asking for $100,000 and it's a startup, typically it's it could be 20%. Some lenders it's 10.
Yeah.
Some lenders are
So we're
30.
10. I'm 10. I mean,
You're
I want to
10.
see that you have 20%, but we only need you to put 10% into the deal. It's as a startup or a business acquisition.
And they don't take it from you. Then
No,
you
we
don't
don't.
like come there, give them a check for $10,000. It's just instead of funding you 100, they'll fund you 90 because you have the 10 in the bank. That's how it works.
Well, I would say we operate off an equity investment as well that operates the same as a down payment. So if you're asking for that 100,000, but you've spent 20,000 over the last maybe 24 months in improvements or other things getting into business, then we'll accept that as your equity investment. It needs to be provable. You can't just
Say I did.
yeah, like, hey, I need 200,000 and I've put 40,000 down, or I put 40,000 into the business. Well, you've owned it for 2 days. Where is it? We're gonna need some sort of background on money invested into the business, but it's not traditional. Hey, I want to buy this car and you need 5,000 down to get in. It's hey, sweat equity. We've done renovations. We bought this, and we've invested this much money ourselves. So it's a little different than a down payment, but 20% overall from what you're asking is what the federal government requires us to account for in most of the programs.
Yeah. Is Stacy? Is yours also 24 months?
Nope.
You can go backwards. How is it 12 months?
It's usually 6 months, depending on how much you've spent. If you told me you've got tax returns or you've got receipts for 24 months worth of, at $2,000-$3,000, yeah, we could take that. But
Sure.
if you've spent $50 a month for the last few months, we probably wouldn't count that towards your equity.
Yeah, it's within what reason. Yeah.
And then I think on the conventional side there's and I think every institution on the commercial side is going to have some type of product, some lower dollar amount, lower criteria product where like for us, for example, probably same. Yeah, I would say our internal process probably a couple days to get you up to $50,000. So and that's 1 year in business minimum. So it's not even the 2 or 3 that again other products or maybe larger dollar amounts. So there is good access to capital, and from that perspective, that's credit cards. And then even higher if it's a secured, if it's a vehicle or a trailer or some type of equipment. So that's it's a relatively quick turnaround. And from our standpoint, it's there's only really three criteria to it. It's going to be your time in business to ensure that you have at least a year, then a satisfactory credit score, and that's a varying number, and then stated profitability. So it's don't even necessarily need to have tax returns. Might need to have some financial evidence, financial proof of that. And again, I think most commercial banks will have some type of product that can get you access and relatively quickly, and that could come in the form, again, to buy a piece of equipment, could be a line of credit, could be a credit card, could be a term loan. Again, those smaller dollar amounts, there's opportunity with less criteria.
Any yeah, go.
So at the beginning, Scott wanted me to make certain that I told you about a borrower education program that the SBA has launched. It's called Are You Lender Ready? It's a 4-part series. The first of the 4 parts is a webinar. During the webinar, we are going to have subject matter experts that come on. The first subject matter expert that comes on is going to talk to you about credit, your personal and your business credit. Then we're going to have someone come in that's going to talk in depth about the 5 C's of credit. Then we'll have someone come on that talks about debt service coverage ratio, really breaking that down for you, really helping you to look at financials. Where do you pull the numbers? How do the banks use that to identify your debt service coverage ratio? Then we're going to get into financial statements. So before the actual webinar, we're going to send you some blank financial statements with a glossary of terms. We're going to have a subject matter expert go over those with you for you to fully understand what those all mean and how to fill out where do you go to pull these numbers to fill out your financial statements. And then we're going to do a case study. So we're going to create a business profile, and it's going to stay the same, but we're going to have 3 different case studies. So we're going to have these different parameters. The first one is where you can qualify for traditional financing. And then we're going to change either the debt service coverage ratio, your FICO score, or the down payment that you're going to bring into the deal. And when we change that variable, you're no longer eligible for traditional financing. So now it's alternative financing. Then we're going to change another variable, and you're not eligible for alternative. So then you're eligible for SBA financing. And then the last one, we're going to change another variable. You are not lender ready. Go see Scott and his team at the S.B.D.C. so that you know what you need to work on so that we can send you back to that financial institution. Then we're going to have someone that's going to go over a business plan. What is needed? What are the components that you should put in a business plan? And last but not least, we're going to do how to pitch your business to a lender to secure financing. The next one, what we're going to do after that is we're going to meet in person. We're going to have 2 panel discussions. We're going to invite 10 traditional, or 10, total of 10, but 5 traditional lenders to speak on a panel. And then we're going to invite 5 alternative lenders to speak to you from an alternative lender's perspective. 45 days after that, we're going to do an office hour where you can jump online. The 2 panel discussions, then 1 day will be an in-person event so you can get face-to-face and be able to have an in-depth conversation with the lenders. But then the 45-day check-in, it's an office hour webinar. You can check in if you are still working on your loan, you still need help, you still have questions. All of those subject matter experts will come back to be able to answer any questions for you. And then the 4th part of the series is 90 days out. We're going to have another office hour to check in with you. We're going to be doing that on a monthly basis. And so you can check on the NorCal S.B.D.C website. You can check with Eric. You can check with Scott. I know the first one that we're going to be doing is going to be at the end of this month, and it's going to be in the Oakland area. I welcome Nicole for us to talk about doing one up here. Be more than happy to do that with you up here. And some of these folks may be on those panels discussions with us, our subject matter experts about one part of that. But that's those are the kind of things that we want to offer you, because our goal is for you to thrive and flourish. And whatever that looks like, we don't know where you are. But if we meet you where you are in that business life cycle, ideation, startup, growth, mature, or you're trying to transition, then we can be a value add to you. And again, for me, at the end of the day, my responsibility to the United States is the 14 counties that I'm responsible for is to make certain I can do anything and everything I can for you to thrive, because those communities thrive and then the entire economy thrive. And at the end of my little soapbox here is that then we all have communities that we can all live, work, and play and raise our families in.
Awesome. You want to end there? Or you want to make a network?
Yeah, that was a great closing, Chris. Well done.
Full circle.
Yes. thanks to Umpqua for hosting today and making the facility available, and thanks to all of our panelists and Scott, the VP of all things lending. Thank you for coming.
It's fun.